Hey, welcome back, everybody, to today's Market Explained, a media experience from FourStar. And I'm your host, Brian Castle. I'm here with my co-host, Mr. Christopher Reardon. Chris?
Good afternoon, everyone. Glad to be here. Thank you, Brian, and glad to talk about a little bit about the markets and what they're doing and what's going on out there.
Well, and Chris is our director of development at FourStar. He's a super smart guy. He's got a couple of young kids. He's an amazing guy. Works with all the financial planning in the firm and the investment management, and leads our recruiting team as well. So he runs the whole development division. So we're proud to have him here. Chris, again, welcome to the podcast.
Thank you, Brian. Glad to be here.
And I'm your founder of CEO, Brian Castle, founder and CEO of FourStar, also advisor to insiders of corporations, advisor to wealthy families. I'm a trustee of the National Boy Scouts of America Foundation, husband to the amazing Tripty, and father of two young, wonderful men, Quinn and Evan. Thanks everybody for being with us today. If you would be so kind as to give us a 5 out of 5 ranking and on our go on Apple iTunes and punch the ranking button, give us 5 out of 5. That would be great. It helps our numbers, and we're still in the top 1% of financial podcasts in America, and we want to grow and stay there. So today we're going to talk about the markets, talk about the economy, and then we're going to talk a little bit about what we see out there and interesting things that we can discuss that we think everybody should know about. So Chris, why don't we get started? Let's talk about where we are with the financial markets.
Yep. So first, I'll start off with the asset class rankings as we traditionally do. No changes, I guess, podcast to podcast as far as order. So we still have international equities in that number one spot, still leading the way. It's at 292 tally points and actually gained 7 points since the last podcast. So we actually saw international firm up a little bit more. Domestic equities is in that number two position still at 277 tally points. And it gained 1 point since the last podcast. Domestic equities has been kind of flat, relatively flat, really since the last podcast, whereas international's gained a little bit more. Commodities is in the third position. And prior to, I would say the past week, for the last almost month, really, commodities has really been getting battered. We finally saw it bounce a little bit, mostly off of oil and industrial metals. So we saw a plus 12% change from the last podcast. We saw it bounce back up to 225. I believe it went as low as almost 201, almost dropped out of the 200s before they kind of bounced back up here. Nice recovery there from commodities. Cash is in fourth at 118, and it's actually -7 since the last podcast. Currencies is in fifth at 96 tally points, -4 since the last podcast, and fixed income is still in dead last at 80, and it's at -6 since the last podcast as well. Really hits risk on environment, international, domestic, and commodities, the riskier asset classes all gaining, whereas the more conservative asset classes, cash, currencies, and fixed income, all really lost ground since the last podcast. Kind of interesting. And like I said, I think the biggest surprise there was the bump commodities got after pretty much free falling out of kind of the upper 200s, almost out of the 200s. It kind of finally bounced off there and seems to have kind of stabilized now. So we'll see if that continues or not.
Yeah.
Moving on to the sector performances. So kind of how is this being reflected in the US markets? The number one performing sector is still energy, and it's up 33.75% year to date. Huge movement there. It has had some ups and downs. I think it was as high at one point as like 40% before, pulling back a little bit. Is still extremely volatile, but still retains that number one position. The number two, which I find interesting, I mean, talk about coming from nowhere. Information technology rose all the way up, and it's actually up 22.52%, moved up 2.2 positions or two spots since the last podcast. Just a rocketing, really the last 2 months or so, information technology has really rocketed up from being in the bottom sectors now all the way up to the number two spot. Industrials is in the number three spot. It moved down and it's at 12.16%. Year to date, real estate is in the fourth position. It moved up two spots, ends up 10.03% year to date. Materials continues to drop. It's down two, and is in the fifth position, up 9.64% year to date. And consumer staples dropped one position in the sixth, and that's up 9.13%. So a bunch of changes there. You had tech and real estate really jump up, pushing industrials, materials, and consumer staples kind of down relative.
Hmm.
And then in the bottom kind of performing sectors, utilities, and it was in seventh. It maintains that, and it's up 5.82% year to date. And then you get a pretty significant drop off after utilities. So moving to that eighth position, we have communication services. Once again, unchanged. So it was eighth last time, and it's up 1.76%. Consumer discretionary is in ninth, and it's down 0.20%, unchanged there. It
Hmm.
was about flat last time, so these have remained. And then we had a little bit of a flip for the battle for last place. So healthcare, which was in last podcast, has now jumped up one spot again. It's down 10 or 3.85%. And then in 11th is financials, which dropped down back down to the worst spot, and it's down 4.80%. So a little bit of jockeying, but I mean, I think the biggest story, if you will, of this is that move we saw from information technology, really the tech sector, because not only is that obviously impacting just the sectors in general, but it's really one of the main components of some of the themes we're seeing in the market right now, which is driving the S&P 500. So.
Right. Nice.
Moving on, current market themes we see. So April 2026 was one of the best months. Just looking back at that month, the S&P 500 was up 10.4% and hit eight new all-time highs in the month of April. That's the strongest monthly performance since 2020 when we saw that, obviously the huge gap down and the pop back up with COVID. And a lot of that was driven by strong Q1 earnings. Um, the Q1 2026 earnings season was great. 84% of S&P 500 companies beat their earnings per share estimates, which is the highest rate that they've beat since Q2 of 2021. Blended earnings growth, so kind of blending them all together, came in at 27.1%. So we saw kind of an average blended rate of 27% earnings growth, which is pretty big. And they were all well above their initial forecasts, which were, if you blend those together, about 12.5%. So big beats there we saw in Q1 for earnings, which is quite incredible. Um, then coming into May, the S&P 500 closed at all-time high coming into May at 7,230. The Nasdaq as well hit a record of 25,114. In mid-May, it pushed up to 7,400. Before pulling back, we've seen a little bit of a recent spate of volatility over the last week, a little bit of a slight pullback, but we continue to be right near there. So, any week now, we could probably hit new highs again if we resume our upward trajectory. So,
Hmm.
overall, really standout Q1 performance for the companies, and that's really been driving a historic April so far, or historic April in the books now. And May's kind of carried that torch for the most part as well. It's been a pretty strong May too.
Yes.
So I don't know if you have any comments on that, Brian.
Yeah, I mean, markets have been pretty good, surprisingly. We have an economy that appears to be slowing down, but yet the markets are acting pretty well. I think the market's kind of expecting it's not going to be as bad as we think it's going to be, but if the oil prices continue to go up, we are going to run into a slowdown for sure. We're already seeing it in Europe, right? They're much more affected by oil prices than we are, because we have our own supplies and stores, and that's really pretty much it. So we just have to wait and see. You're never quite sure how the market's going to react, but right now it still feels like bull market, Chris, doesn't it?
No, yeah, I mean, I think for sure. I mean, I think there are risks out there. We'll talk about it kind of the next section as far as U.S. economics. It's significantly, I think the biggest one being inflation right now, which is starting to rear its head a little bit. Are we going to see that carry through? There's a lot of things, but there's definitely been a lot of bright spots that I think a lot of people didn't expect. Earnings have been strong. The job market has actually held up relatively well. So I mean, I think the biggest right now, the biggest threat is, the obviously the Iran war and everything going on over there, and the constraint it's putting up on oil and the impact that could have on inflation. I think that's really the biggest threat, if you could say, right now to the U.S. economy and this growth trajectory we've had, which has been tremendous.
Yeah.
So, um, flipping over to U.S. economics, and the biggest thing, obviously, between podcasts, the Federal Reserve met end of April, and they held rates steady at 3.5 to 3.75%. Interestingly, now the market's pricing in kind of little chance of any cuts through this year. Originally, I think there was one cut. So we'll see if that does happen
Mhm.
or not.
Probably not at this point, right, Chris?
Yeah, I mean, unless we see drastic reduction there, I know the Fed wants to, I believe, cut, but it's hard to do. And it's hard to justify it, I think, right now, just with the economy continues to be booming. It's hard to kind of really justify it at this point.
Hmm.
So I know
Yeah.
there's even been whispers here and there of, is the next move, is the Fed going to raise rates? That's starting to get whispered now, which was pretty much a non-factor for the first 4.5 months of the year. So
Yeah.
that's interesting. Jerome Powell's tenure as Fed chair ends. So we have Kevin Warsh coming in. He's expected to take over next month. So, we'll see. That's going to obviously change things up a little bit. We'll see how that kind of goes. Business investment in the US rose 10% in Q1 in 2026. That was driven mostly by strong equipment spending, intellectual property investment. So that's good overall. Business spending is one of the obviously main drivers. And then the March PCE, this is the Fed's preferred inflation rating, came in at 3.5% year over year. That's kind of a 1.1% jump from the year prior. So that's kind of the biggest thing that's driven this recent volatility spike we've had, is, some of the inflation reads that are certainly higher than the 2%. And we're starting to see some of that energy um, drive through.
Yeah.
The April CPI number, that was plus zero point 0.6 month over month, and
Hmm.
3.8% year over year. That's the highest annual rate since May of 2023, and just barely above I think it was 0.1% above what the estimate was. Um, but core CPI, so this is when you exclude food and energy, which tend to be more volatile, from that reading. Core CPI was up 0.4% month over month, and only 2.8% year over year. So you really see the impact being in that energy, which was expected. So we'll see if that does kind of continue. Energy prices were plus 3.8% month over month in April, and up 17.9% year over year in April as well. So the gasoline index was up 28.4% year over year. Food at home prices rose about 0.7%. So you can, once again, the major driver here, as a lot of people anticipated, so far has been kind of that oil price, gasoline prices, things like that.
Yeah. Brian Castle. I'm the CEO and founder of FourStar Wealth Advisors. Now, we built FourStar on one simple belief that every client deserves clarity, confidence, and strategy built around their financial story. For over 40 years, we've guided clients through every market cycle, helping business owners, families, retirees protect what they built and then grow their holdings to meet the needs over their entire life for them and their family in the future. We are fiduciaries, not salespeople, and that means we sit on the same side of the table as you always. So, from personalized portfolios to advanced tax and estate strategies, everything we do is about creating long-term freedom and peace of mind for our investing families. So if you're ready to align your wealth with your goals, visit fourstarwealth.com. Let's start building your future one smart decision at a time.
Real average hourly wages slipped 0.4% for the month of April and fell 0.3% annually. So we're starting to see workers slowly lose a little bit of ground to inflation as that starts to tick up a little bit. Obviously, workers that commute, things like that are certainly paying a little bit more at the gas pump when they're driving around. Flipping over to production, and this is where it gets really interesting because we're seeing a kind of, I would say, anomaly numbers here, but we're definitely seeing some differentiators. The S&P global U.S. manufacturing PMI surged to 54.5% in April, and that was the final reading. The kind of estimate in the beginning of April was 54. So a bit of a jump there. That's the strongest expansion since May of 2022. And the May flash PMI, so this is the preliminary reading, came in even higher at 55.3. We continue to see decently strong manufacturing there. Um, Manufacturing output is actually growing at the fastest pace in over 4 years. It's one of the primary job creations we're seeing there. We're starting to see some job creation from there. I think it was the second biggest component of the jobs numbers when we get down there.
Mhm. Mhm.
A lot of this is being driven by a lot of companies are stockpiling, they're trying to front run, if you will, the Hormuz disruption, as far as
Right.
shipping, things like that. We'll see if this continues, if we're going to see this kind of drive, or is this kind of a spike that's going to fade? That's what we don't know. But overall, what we can see right now is actually pretty promising.
Yes.
Switching over to consumer sentiment, the University of Michigan's Consumer Sentiment Index in April was revised slightly up to 49.8 from the initial reading of 47.6. So it was revised up, which is good, but still remained one of the weakest readings on record. So we'll see with that, about 1/3 of the consumers spontaneously cited gasoline prices as part of their worries, as well as 30% mentioned tariffs. So, it seems to be still that kind of the tariffs and obviously gasoline prices really being stressed by the Iran war that's driving some of the negative consumer sentiment we're seeing.
Mhm.
Um, Going to the housing market, April existing home sales were up 0.2% to a bit over 4 million units annualized, which was a little bit of a recovery from March's 3.98 million number. The median sale price rose to 417,800. That's up from 408,800 in March. Um, Surprisingly, April was the first month so far in 2026 where annual listings actually outpaced sales.
Mhm.
So that's overall good for buyers because if we have obviously more listings out there, there's more inventories, things like that for people. Whereas if you have less, then you're going to face more multiple offer situations, things like that. It becomes more of a seller's market. So we
Right.
could start to see this as a pivoting point, pivoting to a more of a buyer's market overall. The 30-year fixed mortgage rate is still kind of stubbornly hanging at that 6.36% as of May, kind of mid-May. So, I think it's really interesting. I think a lot of people have that expectation or thoughts, and I've actually seen a couple articles floating around, regarding, people are still kind of mysticized with this 3% interest rate and or even a 4% interest rate at this point. But historically, I mean, that's a huge outlier, those very low interest rates. So for mortgages, even a 30-year.
Right.
Being at that 6.36, even though that is a bit higher, historically, that's probably about average overall when you kind of take the tops and the bottoms. So interesting there, but it seems like hopefully we'll see maybe a little more pivot in the housing market. And then finally, going to the jobs market, the April non-farm payrolls were a plus 115,000, which was well above the estimates of 55 to 62,000. So that was, a very nice surprise from the jobs number. Private payrolls rose 123,000 with healthcare and social assistance leading the way with plus 53,000. Transportation and warehousing added another 30,300. So
Wow.
the jobs market continues to hold up, which is good. The unemployment rate remained unchanged at 4.3%. So that's overall pretty good. And then average hourly earnings were plus 0.2% month over month and plus 3.6% year over year. Slightly below estimates. But that's where you really start to see with inflation, if inflation's clipping at say 3.8%, you're starting to see that squeeze, right? You're either matching inflation or your earnings are either matching or coming in below inflation. And you're starting to see the real wages start to squeeze and potentially
Mhm.
go negative. So it's where it's really important to see if inflation continues to tick higher, we're going to start to see that squeeze there, which could start to crimp some of the spending and the consumer spending, things like that.
Yeah.
Anything you want to say, Brian, on that real quick?
Yeah, yeah, fascinating. The earnings are still up strong despite the oil and the war. But there's so many little nuances, as you're saying, Chris, that, we see all these things kind of like all swirling around and it all comes together into one economy and we try to figure out what it really means. But it's quite interesting. So, well, anyway, the AI has it caused lots of fear of layoffs, but there's a lot of positives coming out about that anyway. But Chris, go ahead. I'll come back to
Yep.
that.
Yeah, so switching over to the international markets, I mean, a lot of what's going on internationally is really obviously focused right now in the Middle East and everything going on there. Iran announced a new Persian Gulf Strait Authority, establishing a controlled maritime zone in the strait. While most fighting has stopped after the ceasefire agreement between the U.S. and I know the U.S. has halted their kind of attacks again, so this has continued. Iran has continued to restrict traffic. The U.S. has their naval blockade in place. So it's still very tense going on in the Middle East right now. And that's still kind of driving a lot of tension, a lot of volatility in the markets. Um, the UAE announced its departure from OPEC. So they departed actually May 1st. So that's interesting. It's reshuffling, the cartel, the OPEC cartel there. We'll see their OPEC's spare capacity is now expected to average 2.5 million barrels per day in 2027, whereas the prior forecast was for 3.8 million barrels per day. So you can see the direct impact that has of over 1.3 million barrels per day with the UAE leaving. So
Mhm.
huge crimp there. And then the Eurozone economic activity shrank at the sharpest rate in more than 2.5 years. A lot of that's been driven by surges in living costs, hammered by demand and services, and accelerated layoffs. So as Brian, as you alluded to in the beginning, even though we're certainly feeling the effects of what's going on in Iran, it is certainly hitting the European continent harder than it is the US. And then focusing back over to commodities, uh, the biggest one being Brent or oil. Brent crude oil peaked at 138 a barrel on April 7th. It averaged 117 a barrel for April. And it's been trading at about 105 to 110 so far in May. So still, it's about 50% above kind of the pre-Iran conflict, if you will, which was kind of earlier this year. So it's still certainly elevated, but obviously has pulled back from the highs we saw in early April. Gold pulled back significantly from its April highs. So gold traded near 4,724 on May 8th, but then sharply reversed down to 4,548 by May 15th. So still seeing a little bit of volatility there, but I mean, once again, it is still trading at all-time highs pretty much. So gold continues to be strong. And then we continue to see gasoline prices, which is the expectation here to remain well above the $4 per gallon, even pushing $5 per gallon. I know, certainly here in Illinois, which is a little bit more taxed as far as the gas, California, things like that.
Mhm.
Certainly seeing pushing $5, even $6, I've heard in California. So
Yeah.
that continues to be a major driver. And I think the interesting implications there are, not only are we seeing the near term impact on the direct consumer, but we're going to see that trickle down over the next couple months into goods, even food, all those things, because I mean, there's trucking costs for moving those things, all the transportation, logistics costs. All of that is going to start to eat into the inflation numbers a little bit more. So it's certainly something to keep an eye on.
Yeah. So, Chris, in the commodity area, you mentioned gold, oil, and Brent crude and all that, and gas. As we get into this, when oil prices go up and gas prices go up, everybody starts to dig into all the details about the sector. And there's different grades of gas, and different states have different requirements. So there's different grades of gas. The diesel fuel, we still import that, even though we're the largest producer of oil in the world. That grade of fuel actually we import. So there's a lot of nuances to it that people don't quite realize. Nonetheless, we're still in the best position because we're the largest oil producer. But the longer this goes on, the harder it is for people to handle it. Although, just to keep it in perspective, folks, by way of reminder, back in the 1970s, any of the old timers around might remember the oil crisis back then, and oil went from $3 a barrel to $18 a barrel within about 2 weeks. And that would be the equivalent of oil going from, $100 a barrel to $600 a barrel, like six-fold increase. So that would be really catastrophic. And that's kind of what the way it was in the 70s. It really crippled the 1970s. So it's bad currently, but it's not as bad as it could be. Let's put it that way.
Yeah, I mean, certainly. I mean, I think, and I mean, I think that's also playing out to a degree. I mean, we're seeing all-time highs on the S&P 500. We're seeing great earnings. I mean, it certainly is bad, and it seems to be potentially accelerating a little bit here. But with where we are at and what we can see right now, things still remain pretty solid.
Mhm. Yeah. Well, and then also in commodities, because of the need for rare earth metals, Chris, we're seeing lots of investment in America. In fact, we've seen a couple of presentations in the last week, one at a conference and one on Zoom, all about rare earth metals and groups that are mining rare earth metals, new processes to get them, because America had given up about 90% of the rare earth metals in the world to China, which is not a comfortable place to be. So Trump was negotiating with rare earth metal capability with President Xi when they had that summit last week over in China. So apparently, we've got enough to handle our needs right now, but America's trying to rebuild its stores. And the biggest discovery in a long time, Chris, 2.3 million metric tons of lithium was discovered in West Virginia. So, we're looking for it. We're finding it now. It's still going to take a couple of years at least to start to extract some of these things. So it's not going to solve the problem overnight. But we are working on our rare earth metals lack of rare earth metals, I should say. So that's the biggest development in the commodity space that I know of at this point.
Yeah, I mean that's certainly been big. I mean, not only rare earth, but industrial as well. I mean, copper's hit new all-time highs as well. Silver is another one. So, we have a lot of these within as our it's called our capacity, our transportation, our infrastructure becomes more and more reliant on energy, on whether it's batteries, all these different things. We have AI now. All this, it's really feeding the need for an infrastructure where we have, the semiconductor components, all these different things. So it's more and more important, really, that we are able to source those from reliable sources. And I think obviously the best case scenario there is sourcing it from the U.S. if we can. So the more
Mhm.
we find of that, the better.
Yes, absolutely. Well, good. I think that's what we got on commodities and the economy, Chris. Anything more?
No, I think that covers at least to what we kind of the last segment we have with what I have.
Okay, good. Well, and what we see out there, Venezuela is starting to now show strong output and growth of oil. President Trump, when he came in and took out the President Maduro for crimes against America, did leave the regime in place, and he chose to work with them and hold off, like any insurgency in Venezuela. The major international oil companies are now activating previously mothballed rigs, and they're developing right now. So it's still going to take a while, but output is up in Venezuela. They used to produce 3 million barrels a day. They got below a million barrels a day. So they're back above a million barrels a day, and they're going further. So we'll see some things happening. That's on the international front. Also indicted recently was Raul Castro. After Maduro was taken out in Venezuela, and you start to see a pattern here. We've got the oil nations like Iran now. Obviously, we're dealing with Iran and the 46-year war that they had against the world and America. So now we're dealing with Iran, we're dealing with Venezuela, and now we're dealing with Cuba. And Cuba's been a bad actor state for a long, long time, and they're guilty of many crimes against to America and a lot of the developed world. So now they've indicted Raul Castro, and the Todd Blanche, the Attorney General, wants Raul Castro to come to America, to Miami, to face a court. So we'll see if that's ever going to happen. But it seems like there's emerging more of a strategy than people thought. Some folks I've talked to are seeing this now come into a strategy. We're dealing with all these different countries all at once. They all seem to be, communist regimes. Many of them are oil states. And so now we're trying to get the world back to a normal place where we don't have so many bad actors running the biggest commodity in the world. That's a little different, though, that for Cuba, they don't really have an oil production operation, but nonetheless, they've been a thorn in the side of the world and America for a long time. So, and I know Trump has a blockade around Cuba, and they're keeping them from getting oil to put pressure on them to change their regime and change the way they run that country. So, very interesting. Also, Chris, back to America, there's a big change in the American political system where there are groups that are very, very left wing, communist almost, looking to basically, create income programs, more and more benefits, all kinds of different things for the lower 20%. And someone said recently on TV that I thought was interesting that, rather than us being hostages to the billionaires provide jobs, the billionaires have lots of things that that they bring to society. We're actually more hostage to the lower 20%. We all work for the lower 20% because they get all the benefits from the government and we fund the government. So I think we're much more hostage to the lower 20% of society than when we are to the upper 1%, and everyone complains about billionaires, but they're very productive people and they create a lot of prosperity and a lot to the world. So anyway, it's not as bad as people might think it would be. We did see a Marxist, communist, democratic socialist get elected mayor in New York, and now there's all kinds of difficulties. Ken Griffin, the famous billionaire from Chicago, who left Chicago because of our policies here at our headquarters city, now he was going to build a building in New York, and now he might be leaving New York now. It's counterproductive to, go after a billionaire when he's bringing 16,000 jobs and 100,000 new people to a building in Manhattan. But yet some of these politicians are doing those things. Even the mayor of Seattle said, well, when some billionaires wanted to leave Seattle in the tech industry, they said goodbye. Well, now the governor of New York is pleading with many of those New Yorkers who used to be who are in New Yorkers and are now down in Florida, praying for them to come back. And I'm not sure they will until they get some serious policies. So we're seeing a lot of change in the political world, but it doesn't seem to be going too well for the groups that are pushing those ideas. And so the public's getting sick of all the government programs and the DEI and all the push for government programs for people. What they really need to do is help people get jobs and build the economy and not just give people benefits, right? So that's just one thought. There's a new Surgeon General. Trump had nominated Casey Means for the Surgeon General. Now she had some very controversial thoughts on vaccines, so the nomination didn't go through. But a Fox News contributor, a very famous doctor, Nicole Safir, has been naming it as a U.S. Attorney General, so that could move that in the right direction. And of course, RFK is working on, with the Health and Human Services, working on our food systems. America is the heaviest society in the world. We've got a lot of processed food, and we're trying to change many of those things. Chris, what do you have?
Yeah, so we're starting to hit IPO fever again now.
All right.
First and foremost, we have SpaceX. They're readying for their IPO, which is planned right now to launch as early as June 12th on the NASDAQ. I think I saw they had the ticker SP, I think CX, I think,
Yeah.
is the ticker. So that's going to be potentially, most likely, the largest IPO ever. And then I think it was either today or yesterday, we had ChatGPT's creator come out and say that they are going to IPO right now, are planning to IPO in September. So we continue to see a bunch of these large, whether they be AI, and SpaceX is a really interesting, as they've really kind of started to already go through a lot of the disclosures and due diligence required for IPO. We're starting to get a little bit more of a peek under the hood as far as their earnings. And you can see where I believe their kind of satellite internet, if you will, has is the only segment or silo of theirs that is actually posting positive cash flow, both the space side as well as the AI side. Because if you guys don't remember, SpaceX actually purchased the XAI, another one of
Yes.
Musk's companies there. So both of those are posting negative. So it'll be really interesting to see kind of how both SpaceX and OpenAI, get priced. And then Spirit Airlines is preparing to liquidate its fleet and end operations. So Spirit Airlines declared bankruptcy, so they are going through that. They're liquidating. So another budget carrier now kind of bites the dust. We're starting to see kind of the jets get sold off, all that stuff. So it's kind of a sad end there. And then Apple posted a strong fiscal Q2 beat at the end of April. And an interesting tidbit about this is despite their iPhone revenue missing estimates, which has really been what has kind of flagged Apple really for the last 10 years, has been, they saturated the market so much. It's how can you really kind of push the needle? If everyone already has an iPhone, you're going to get maybe some upgrades here and there, but you're really not revolutionizing anything. How can you push the needle? Well, this is the first time really we saw the Apple services and software segments drive the earnings beat there. So that's positive, and that's obviously what Apple was trying to do. They were trying to pivot to, Apple TV, all these different services and everything they're trying to kind of segue out into. And we actually saw those kind of lift up the company a little bit. They still have the iPhone, that's still the bread and butter, but adding on these is a differentiator for them. So I'll be interested to see if that continues. Do they continue to kind of pivot and really grow into those segments? Or is this just kind of a short-term bump they're getting? So interesting.
Yes. Chris, there's a number of Supreme Court discussions and rulings that have come out here in the last few weeks I want to cover as well. Some very interesting stuff. First of all, the Supreme Court confirmed the confidentiality of donors. Now, why that's important is that we've seen folks on both sides of the aisle try to find out who the donors are to different groups that they oppose to go after them. So we've seen folks on the right try to use donations to Planned Parenthood against those donors because those people are generally on the left. And so more recently, we then also have seen a group that was going after pregnancy care centers and anyone who would donate to reproductive rights on the other side. So now the Supreme Court has said this is crazy. The donors should be able to donate to the nonprofit they want to without scrutiny. So they reconfirmed the confidentiality of donors. And then also another very important thing that's helped developed here in the political world, the redistricting of congressional districts. For about maybe 40 years now, it's been the standard where a number of courts have said, it's okay for them to states to draw the congressional lines where they could produce a congressional district for a certain group, let's say a Hispanic group or blacks or different minority groups to give them more representation in Congress at a certain percentage level. Well, it's gotten to the point that there's more of those representatives than the population that they have in America. So the Supreme Court realized that things were a little bit out of whack, and so they decided, let's go back to drawing the districts, giving everybody the same proportional representation that they used to. So now we're seeing in certain states where they're going back and redrawing all the congressional lines, and it actually means that there are going to be less of those single districts that are for one particular group or another, where it's going to be a melding of all the groups together and everyone have a similar representation. So it's changing the political calculus. Many folks thought, certainly in the midterms, a president of one party usually loses seats or maybe even loses the House or the Senate. It may not happen that way now because there's so many changes in the way redistricting is going. And so we're going back to basically a fair way of doing it, which I think is interesting. So, Chris, what else do you have?
But no, that about covers it for what I got for this month, I guess, right now.
Excellent. Well, folks, so as we always say, here's all these things happening and how it affects the markets are really what we're concerned about. We're concerned about investors. And so that's what we do is for a living is work with investors, try to give them the best returns and minimize their risk. So what are we doing about it? Well, we always talk about the four-star protection plan. And that's a program, of course, that many of you have heard on this show before, where about 85% of the time the markets are going up in a normal fashion and everybody makes money and we're all happy. And about 15% of the time we're in some sort of a correction, meaning downward movement of the market or an outright crash, right? And so in those times, we've developed a program in which we can get money out of the market and not take the risk or reduce our risk substantially, either 50% of the portfolio, or in some cases, 100% of the portfolio will go to cash. So we've been very successful with that. We were starting to get, Chris, in the first quarter, some signals, as you know, and we were down to position two, almost got signals for position three out of four to go to maximum cash. And then it stopped going down and turned around and going right back up. So now we're back
Mhm.
in for the most part. There's a couple portfolios that still have a little bit of cash, but most of the things are going in the right direction after a difficult first quarter in 2026. April was the best month since 2020. And so this month hasn't been bad either. So we're experiencing a strong market. So the protection plan can protect when we need to. And we're back in. We're not as protected as we were before because we think the markets look like they're going up. But we can turn on a dime. If things change and go the other way, we can certainly make changes. So we're at position one in a couple of portfolios, but everything else is fully invested and we're going for it. So, Chris, let's see how things play out. And that's what we're doing about it. We're trying to protect investors and get them a good return. And it looks like the markets are signaling that we're going to get good returns going forward right now, at least. So that's all we have for today, Chris. Um,
Yeah.
and everybody look for the blog posts at the Leadership Matrix. There's some real estate discussions about the stuck real estate markets. How do we get the real estate markets going again? There's other stories about markets as well, the financial markets. So have a look. There's always some interesting subjects at the Leadership Matrix at fourstarwealth.com. Chris, I think that's all we have for today.
Yeah, I think that about covers it for the week coming into Memorial Day weekend. So happy Memorial Day week for everyone out there.
Yes, Chris. Thank you. Everybody, great Memorial Day weekend. And we'll be back again with another episode here very shortly and probably before the end of May. Thanks, everybody, for being with us. Four Star Wealth, today's market explained over and out. Bye bye now.